So,
best.
thank you so much, Guilherme. It's been a pleasure to witness all the things you've done for the sector. The sector is new, not so new right now, but it was a couple of years ago. And this effort to put things in the agenda of the top executives in Portugal is critical to make sure that AI delivers impact. So let's talk a little bit about transforming a bank with AI and focusing mainly on personalization. My name is Ricardo Chaves. As Guilherme was saying, I lead the Center of Excellence for AI in Banco BPI. We belong to a group like CaixaBank. We are a recent team, so we have 1 year and a half. But we started fast and with a lot of traction, so I think we have already some interesting things to share with you. First question, critical question, what does it mean to be a universal bank today? A universal bank is a myriad of very different things. So different products, savings accounts, savings products, investment products of all the types, and also a lot of diversity in channels. Very different channels, different preferences from the clients, hybrid journeys among these channels. So all in all, the problem we face when we speak about personalization is that we have universal customers, omni-channel distribution, multi-segment. When we look at the clients, they can be looked at from the traditional perspective of 3 segments onto 200 micro segments, 300. I've seen it all in several banks. Also, the new competitive landscape is pushing us forward all the time. Some years ago, 15 years ago, universal banks would compete against universal banks. That's not the case anymore. It's funny that a while ago people were saying fintechs will kill the banks will no longer exist. We are still here. We are still here because we are universal and we have been finding ways of increasing resilience through the universality of our service. But it's a fact that this new environment is challenging and is pushing us forward and making us better every day. So when you look at our competitors right now, we have to look also to fintechs and digital banks and to big techs. And they are always pushing forward what? The UX. Most of the innovations in UX have been driven by fintechs, their merit. They have reward systems that are embedded in the day-to-day of our smartphone, embedded finance in the operating system, and also the challenge of open finance and embed our own services within ecosystems that don't belong to us. So sell our products in third parties channels. Looking at this is our strategy. It's just a glimpse of what we are doing in BPI. We identified 5 strategic axes to use AI to transform the bank. The first one, and we will look deeply into it, it's to personalize the experience and maximize engagement, which means basically 2 things. Automate interactions with customers with predictive analytics. So go from do as you wish to an industrialized and systematic and disciplined approach with our clients. And also a byproduct is to align the value proposition, product and journeys with the underlying segments, needs and behaviors with more sophisticated analytics. Second axis, increase efficiency and accuracy of risk management. The basis of a bank is to manage the balance sheet, so manage risk well. So of course, all the predictive power of AI is critical to manage better risk, fraud, compliance, all those areas. Third axis, improve efficiency and customer satisfaction in key processes. Here we are looking right now at document AI as the key enabler. The banks need to deal with documents. We still need, and I believe due to the regulatory rules, we will need to keep documents for a while. So why not making those documents a lever for good service, which means that eventually a client can deliver us 10 documents and we don't make him fill any type of information. We have the information there, we process it automatically, and the process could be almost in real time. Generative AI, we'll get there. Also, generative AI will transform the way we do banking. We still are giving our first step, and I will explain you a little bit why, because we need to make this a safe journey, keeping all the compliance and the principles respected. So we cannot take risks due to the hype, but we believe it will transform a lot. And then provide data insight service to other areas. So we are trying to consolidate everything that is analytics in our area, because we take advantage of the synergies. And so we build then service lines to the several business areas of the bank. Let's start with the personalization. First of all, a conviction, a belief that I would like to share with you. I've seen in several sectors and in banks also, people saying that AI will take the humane component of the relationship in the bank. I think one of the most humane things that we can do to a person is to personalize the way we would address that client. And I really don't think how that is possible, because if you look at what the bank did traditionally, the bank would define the products the bank wants to sell because they are more profitable, because they need scale in the sale of those products. And then they would carpet bomb the clients through every channel available and try to sell and meet the targets. This is what a traditional bank would do. And this is so far of personalizing whatever, that with AI we can increase results, sell more, but in a way that instead of creating this type of reaction, creates this. We try to understand the context of the person. We try to be accurate when we address her with a specific product for a specific need. And so I really don't understand the point why AI could reduce the humanity of the contact within a bank. I think it increases the effective power of the bank within its clients. So, but this is a complex target to achieve. So, these are three alternative models to recommend products. We have the recommendation systems, the classical ones. You've seen in early Amazon, early Netflix. So if you bought this, you probably want to buy that. Why? Because I'm looking at people that also bought the same thing as you, and I try to order the products by their affinity. It's easy to implement, but it's unlinked to real probability. So basically, for each client, you know what is the next product to buy, but you don't know exactly what's the probability for that sales. And so you could be trying to sell in people that really don't want the product. The other one, this is what we are doing, just to be transparent and fair. The machine learning propensity orchestrator, we named it like this, so it's not a scientific name, it's the name we give him. We give it in BPI. It's this. And what is this? We developed around 15 machine learning models for each product. And some of them are already very fine-tuned. Some others are going through the maturity stage. And then what we do is that we mixed all of them together. We normalize them by actual probability of sale. And then we deliver the marketing, either for, and we'll get there, digital journeys and also physical ones, an orchestrator. Orchestrator means that you can see for each sales representative or branch, as you wish, the priority of products per client, but organized in probability. And then you can decide whether you're going to explore that probability or you're going to mix it with, for instance, profitability criteria, which you can be interested in mixing both, or even campaigns. And that's why we call it an orchestrator. It's not completely automatic, but for each sales representative, he gets for the whole client he has, the ones that are really propensed to buy at that moment and which product. And then you can evolve to micro-segmentation. You've seen probably, if you look at Farfetch, Amazon, you have very sophisticated approaches with micro-segmentation. We want to get there. The main difference between this one and this one is that here you try also to promote the switch of a person from one segment to the other in order to place people in segments that are easier and more profitable to work upon. But this is what we are trying to deliver, and we will deliver this until the end of the year, and we are putting it to work next year. One challenge in an universal bank, channel. If you look at the pure digital bank or a fintech, 100% of the sales are digital. In a universal bank, that's not true. There are lots of hybrid journeys, people that start online, but a lot of people end up in a physical contact with a sales representative or the branch. So it's normal to find 25% of digital sales, 25% hybrid, and 50% traditional. So the point is, most of the areas like ours end up in a very small corner of the bank serving the digital area only, with no possibility to transform the commercial processes. In BPI, that's not the case. And so we are focusing here, of course, but we are putting a lot of effort to make it work on the network. And when we do it, we need to be smart in prioritizing. And I'm sharing frameworks that we use in our everyday problem solving. So when we imagine that you have machine learning models that reach their some maturity. In the end, what you will find is that for some products, personal loan is one of it, you can reach very high predictiveness. And for short-term windows, for 1 month, 2 months. And when you have that, that's gold, because you can translate that into very high conversion rates. So then you need to put your best resources targeting the closing of the sale with the client. For others, you can be in this area, for instance. This is for house loans, the mortgages. Here, not so amazingly, the models can predict well if the window is long. Why? Because the decision of the client is also long. You have to switch house probably. You need to find a house. You need to sell your old house, so it's longer. This means that the way you're going to address this area is completely different from the way you should address this one. For instance, here, you can build a digital journey that remembers the client, that whenever he wants to switch house, he can do it with a mortgage in a very simple process with us. But you're not going to tell this to him all the time. You will tell him this eventually, sometimes. The same when you have models that are trying to target short windows, but you didn't find the probability is not too high, or your accuracy is not too high. So one thing that I would like to highlight is that you need to go through this with the business areas in the pure marketing perspective very thoroughly to understand where are you going to put long journeys like the mortgages, because just mild awareness for the client, because when he wants, he knows that he can come to us and decide, versus push on contextual sales opportunities, short-term, high propensity. And also where you're going to put your human resources, for instance, typically for closing or advising, versus the digital journeys that allow you to contact the client more softly. But this is a complete difference from what we had in the past. The bank, BPI, had a trigger, a very sophisticated trigger base to address the clients. And you probably all know what this does to a CRM. You flood your commercial areas with hundreds, thousands of leads, all of them with very low conversion rates. And why is that? Because mathematics doesn't fail here. If you have trigger 1 and you know that 5 or 3% or 4%, you have 3% conversion here, you cannot split these where the successful ones from the unsuccessful ones. The only way to deal with the trigger is go through the whole group of clients that were selected within the trigger. What does this mean? That to reach here, there's a lot of waste. A lot of calls that you're going to do to your clients that end up with nothing. And you lose credibility, and your physical channels don't use the CRM. This is where most of the organizations I met are right now. This is a view of a pilot that we did, in this case, in personal loans. First of all, we end up with this because the score is mixing all the relevant variables and is prioritizing by sales propensity. So we eliminate by nature most of this waste because the first clients we contact have a high probability of being the successful ones in the trigger-based that was used prior to that. And then there is a second effect that we've noticed in several approaches that is amazing. You predict sales like this, but you get sales like this. They are higher. And why is this? Because the model is identifying people that are similar to those that bought in the past, but that the bank wouldn't contact anyhow. And so because they are similar, you can convert, and you convert in a higher conversion rate than you expected. But another thing, people say when they are on the conservative side, but using triggers is better because I know exactly why the client is being addressed and I can explain the client. That's not exactly true. This demands some effort, but it's doable. I'm sharing real life examples. Because you have the scoring, and the scoring is a measure of propensity, of probability to buy, and because you have explainability. There are several techniques you can use to show why does that client has a scoring of 850. And using the explainability allows the sales representative to understand that two clients with the same probability to buy have different storylines, and he can understand. In this case, we were able to show the explainability, and we had a conversion map from the factor that was considered relevant to the commercial speech, the script that he should build. We were nervous when we launched this because we didn't know if they would adhere to this or not. But in the end, what they told us, first, we are contacting people that need the credit. And this is a difference from the past, from the trigger area we came from. Secondly, we build a conversation that adheres to the client situation. And even if the factors aren't the ones that in the end justify the sales, the fact is that the client believes these guys are looking into my case. They understand me. And so it's a much better way to start the conversation compared to a very cold and general trigger-based conversation. This is the next level we are looking into, is not only manage propensity and define high-level journeys, either physical or digital, but also attempt different ways of reaching the customer in terms of the type of things you say. If it's funny, it's casual, it's irreverent, enthusiastic, and try to understand the positive sentiments. We are all different. Our clients are also all different. So they don't all like the same way of speaking, of approaching them, if you want to speak about their financial needs. In the end, if you look at the traditional confusion matrix to wrap up this effort and how you should think of it, we have the models here. This is what we do every day. We are putting pressure on our data science team to make sure that the models increase their accuracy. So here is purely operations management pushing for performance. Then, whenever the probability, the accuracy reaches a certain level, we put the model in our orchestrator and we industrialize the sales. This is a very important sentence. We industrialize the sales. This means that we look at our customer base as an asset. If there is sales propensity there, you shouldn't let your commercial areas decide whether they are going to push for it or not, because that is your asset. You're investing in your customer base. So in those cases, we have this orchestrator where you have likelihood to buy the product, profitability, best channel, best time to contact. But wait, risk that you have to manage very closely. The false positives. Why? Because when I started, I highlighted that when you manage personalization, you fail. You fail too. So whenever you industrialize and you push hard on top of clients that are false positives, you very easily make the client go from happy to from hating you to hating you. So in certain cases, silence is gold, and you need, when you start industrializing, you need to monitor very closely the whole effect of these operations in your clients. And of course, then there will be some other areas that you don't have specific clues and you have to work in the traditional ways, advise, explore macro segments, A/B testing, all that. Finally, generative AI. I'll be very short. You've all heard a lot of things about generative AI. There are good reports out there explaining the potential of generative AI. These are the areas we are looking into. We are doing a big project in CaixaBank trying to sort out 6 use cases and mainly try to understand what infrastructure are we going to use and how that infrastructure complies with the basic rules that we need to address, like confidentiality, data protection, personal data protection, all that. These models are very powerful, and the more powerful they are, the more damage they can produce if they are used in the wrong way. But marketing and sales, here we believe there will be a complete revolution. I remember my old times at Chaves when we launched MBWay. This can convert a 10-people team to a 2-people team, probably with higher impact content. Customer operations. I believe that everyone that was doing NPL in the old-fashioned way is quite frustrated because everything will be reversed to the LLM, so it's impossible. There are very interesting techniques we are seeing here. Some use the LLM from end to end. Some use the LLM only the embeddings of the LLM, and you build the bridge inside the bank to make sure that you keep confidentiality of your data. Software engineering. For a bank, this is a new world. We have systems that come from the 70s. We need COBOL programmers. We have DevOps in COBOL. If you speak of COBOL today to a young guy, he will run away in fear of the conversation. But this allows you to program in Python and translate into COBOL, and to look to a COBOL system and get the documentation ready. So this is amazing what this can do. Of course, there are challenges that will have to be faced. The main conclusion we are getting is that if you have a senior DevOps, you can be more productive without any junior DevOps on your side, but only with these tools. But we need to look into the future. And so if we do this massively, in 5 years or 10, we don't have senior DevOps. So this has to be a solution for the short term, medium term, and long term. So the hype sometimes put you thinking that this is too easy. This is not so easy as it seems sometimes. And legal, risk, and compliance, all these areas are going to be transformed. Just last thing to share, we are looking at the different levels of risk that each use case will have in terms of generative AI deployment. Depends on the process regulation, on the type of end user, on the level of automation intended, on the data constraints, public data, proprietary data, restricted data, for instance, with personal data. This is something we are not using yet anything of this, but these are the ingredients that are feeding our discussions around this debate. This is from PayPal. I've seen this in a presentation. They are using this matrix, and it seems a very useful matrix. So basically, they split the use cases, whether they are customer-facing or internal cases. For instance, like if it is a bot to help your sales representatives to answer the clients, it would be an internal case. And then, is it Copilot or driving solo? Is something that will build end products on its own, or is something that will just advise or help you build human end products? So personalization will be thoroughly impacted by generative AI. I didn't bring yet the cases because, to be honest, I prefer to bring things that are already being done, implemented in the bank or very close to. I hope next year I have several use cases to share with you about generative AI. And that's it. I think personalization is, I wouldn't say the future, is the present of every industry. It's tough to do. It demands a real commitment to the client to make sure that you're there to help him, to understand him. In the bank, we take it very seriously. We know it's hard. It's a joint work with the AI team, with the business areas and the technological areas. And I'm happy to answer any question that you have. I'm happy to share with you our journey. Thank you.